All right, good evening, gang. Testing 1 2 3. Testing 1 2 3. Let's do a quick audio check. Just want to make sure everybody can hear me. Testing 1 2 3. Type a 2 in the chat if you can hear me, please. Type a 2 in the chat if you can hear me. Hey, Jerome, Neil, William, Matt, Delmar, James, how's everybody doing? All right, guys, give me just a couple minutes here, make a couple of slight adjustments, and we'll go ahead and get started. Be back in about 45 seconds. All right, guys, I'm back. Do me a quick favor. Let me know if you can see my screen. Had to make some adjustments there on the slides. You should see the slide, top tools for catching corrections in major moves. If you can, just give me a shout out, please. Let me know. And if so, we'll go ahead and get started here. All right, perfect. Everybody's typing in yes. Okay, good. I see it. Awesome. Okay, guys, let's go ahead and get started. If that's okay with you, we're just a couple minutes past the hour. I don't want to waste anybody's time. My name is Silas Peters. I'm the founder and head trader at Cecil Swing Trader. And first off, I just want to say welcome. I want to say welcome for attending this presentation today. I know that everybody's time is precious. There's not enough time in the day to get everything done that we want to do. So I do appreciate you taking time out of your day to hopefully learn something very valuable, a strategy that we put together last year and we just rolled it out here in the end of December, actually. So it's pretty much hot off the press and extremely proud of it, extremely excited, something that you can start applying into the markets immediately if you wish to do so. And I encourage you to ask all the questions that you want during the presentation. I want to make sure I get through all the meat and actually teach you the strategy, the setup, the pattern, and then I'll go back and answer all the questions that you may have at the end of the presentation. So we're going to be together for about 60 minutes or so. And if you are here, again, I want to say thanks. It means that you're ready to learn up and master a very high probability strategy that can hopefully take you to the next level. Before we begin, we must always start with the risk disclaimer. Past performance is not necessarily indicative of future results or substantial risk loss associated with trading. Only risk capital should be used to trade. Cliff Notes version of this means don't trade with your rent money, your mortgage money, your child's educational funds, your milk money. You can lose money in trading. So I'm sure everybody is familiar with the risk disclaimer. If you want more information about that, I can send you a copy of this at the end of the show. But now we want to make sure we shut everything down, remove all distractions. That means closing browser tabs, logging out of Facebook, putting your phone on mute, hushing the crying baby. We're going to be together for about 60 minutes or so. Like I said, we are recording. I cannot guarantee, can never guarantee there will be a replay because I can't promise what technology will do, if it will cooperate or act up. So make sure to listen closely and take notes. But before we get started, I just want to formally introduce myself again. Simply put, I'm a husband, father, son, love hanging out with the family, whether it be at the beach, on a boat, hiking, on the golf course. I spend a lot of time working, a lot of time in front of the screens. So I like to get outside, enjoy the great outdoors when I can. There's some pictures of myself, my family, and here a recent picture of me, very poor attempt trying to grow a mustache. I get a lot of heat for that. But that's my family 2 daughters and my wife. Now, how did I get here? How did I get here, get to where I have the privilege of speaking to you today? Well, in college, and if you can't tell by the picture, and this is not a rub at anybody, especially those of you in Ohio, this is actually my alma mater, University of Alabama, Roll Tide. And in college here at University of Alabama, I majored in investment finance and economics, but I had no idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. And we were playing one day, and he was asking me about my plans, what I was going to do. We started talking about his experience in past lifestyle, working in Chicago in the pits, and I was immediately intrigued. And I went back home, started doing some research on Chicago, the trading floors and everything. And I was absolutely enamored by every bit of it, everything from the trading to Chicago life. So what did I do? Well, needless to say, I was a bit green on the sleeve when I sold my car 3 days after I graduated. I rented a U-Haul and I drove to my new digs in downtown Chicago. And I signed a lease right here in the 2 honeycomb towers, the Marina City. Anybody familiar with Marina City? Right here on the 23rd floor overlooking the beautiful Chicago River. I was directly above Smith & Walensky Steakhouse, could barely afford a Fiji water there at the time. House of Blues was also right here. A block back behind me was Harry Carey's. Just a tremendous experience. And actually on that same day that I moved in, I took the U-Haul back to its depot. I hopped on an Amtrak train and I scalped a couple of tickets to the US Open at Olympia Fields to chase Tiger and Phil around in Kohler, Wisconsin. So you say that was my first trade, if you will, while in Chicago. But back to my journey or my career path. My first quote unquote career until this, and I want you to picture this. I was working the Asian, European, and early New York session trade desk. And if you remember, I told you that I sold my car. Well, this picture right here literally could be me walking to work around 6 p.m., 2 a.m., or if I got off early, maybe 6 a.m. I remember on numerous occasions me walking down the middle of LaSalle Street right here, nobody but me and a snowblower in the entire city of Chicago, and then walking into the Chicago Board of Trade and the temperature reading a solid negative something degrees Fahrenheit. Now, I'm from the deep South, South Alabama on the Gulf Coast, and I am not accustomed to those types of temperatures. But I remember when the teens were like a godsend of warmth. If we got into the teens or the 20s, it was getting warm. So I did this right here for a few years, working at the Chicago Board of Trade, really handling some serious size trade size across the Board of Trade, MERC, NIBOT, NYMEX, and various London and Asian exchanges. We did this for a hedge fund, banks, CTAs, everything from corn to copper to hogs, Eurodollars, Japanese government bonds. Incredible learning experience, both with the markets and trading, as well as the Chicago big city life. But I decided to head back south when some other opportunities opened up. And that's when I went truly corporate. I went from the fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life managing equity and fixed income portfolios and other investment management roles in this glass building here. And to me, this was extremely boring, but it was the safe route. I missed the action and excitement of the pits, the tape, the screens. So through some additional contacts, I was then led to a day trading firm where I helped run operations, execution, trading, education, to running a couple of futures brokerage firms, and then ultimately working in a family office serving ultra high net worth individuals, doing all this stuff right here. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss the trading and the trading world in general. Me sitting in an office tied to a desk, looking out the window, And of course, dealing with typical corporate red tape was just not in my blood. I wanted to get back to the markets, to the charts, to the trading. And while I was still trading during this time, I just missed being in the weeds of the markets, following charts, doing analysis, and so on. So I left the corporate world and I started seasonal swing trader. And this is where I publish research, ideas, and analysis to my followers, and it holds myself and our community accountable each and every day. But during this entire journey, there were certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I quickly learned I was not a trading god. I was not above the market, that the market did not care about what my position is. The market did not care about my opinion or what I thought it should do. So what does that mean? It meant blowing accounts, emotional trading, acting like a gunslinger, poor risk management. I attribute that to all battle scars. And in this workshop, I'm going to attempt to help you to think smart, think logical, with a proven price action strategy and plan so you can avoid the many mistakes that I, and I'm sure several of you, have made or are currently making. But let's talk about you. Why are you here? You're here to have a reliable pattern for all market conditions, to have a strategy for all asset classes, and to be agnostic of market bias. In today's markets, it's imperative to make certain that we have a strategy that can trade both ways. We want to employ strategies that can profit during up markets, down markets, and even sideways markets, and do so without guessing. So I'm going to show you a pattern that results in trend reversals, show you the point where a trend is likely to reverse, and show you a pattern with the least risk and highest reward. So does everybody want to see this? And do you want to see it now? Does that sound good? All right, awesome. So are you ready to learn a strategy that is not only low risk, high reward, but also works in all markets, all time frames, all asset classes, all market conditions, and all styles? Of course you do. I don't want to sit here and teach you a strategy that only works on a 1-minute Bitcoin chart or a weekly Facebook chart or a 4-hour crude chart. I want to show you a simple and straightforward strategy that works in any market, in any condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol, and more. And I don't care if you're a tick trader, scalper, day trader, swing trader, position trader, or if you trade the underlying contract, call options, put options, debit spreads, credit spreads, reverse, crouching tiger, hidden dragons. I don't really care. What I'm going to show you is very powerful, and I'm going to prove it to you. Before we continue, it's important that we cover the process. Has anyone here heard of Jesse Livermore? Has anybody heard of Reminiscence of a Stock Operator? If not, I encourage you to go to Amazon, get you a used copy for maybe $5. A great, great read. A question I often receive is, what do you think about the market here? My typical response is, I don't know and I don't really care. I know that might sound a bit harsh. Maybe it sounds ill-informed, especially when you're asked by friends or family members, but it's true. For the most part, I really don't care about the daily news that flow in and out of the market. I'm a trader that trades strategies based off probabilities. So we want to forget about the market assumptions and only focus and trade with high probability strategies in what is in front of us. That means no more predicting. We also want to realize that knowing what is going on in the news and knowing how to manage money consistently are two separate things. So for successful traders, it's about your strategy, your logic, and your process. It doesn't matter what you think the market is going to do tomorrow. And I realize it's a difficult concept for maybe a newbie trader to understand, or even seasoned traders. I certainly want to form my own opinion. It's just human nature, but it took me years to figure this out. You see, it doesn't pay for me to try to absorb every financial story out there or slap every indicator onto a chart. All I care about is when the markets I am following reach key criteria. But there's one more trait. There's one more trade, because if I allow probabilities and not talking heads to define my next move, we want to possess and control this last trade, and that's patience, because we know that trades should never be forced. We know that a forced trade is not a statistically sound trade. We are in this for the long game, and patience is expected if you wish to bring in profits over the long term. Boring, maybe to you aggressive traders out there, but I am more interested in the profitable trades, not trying to be a short-term hero who tries to trade every scenario out there. I am confident in trades that consist of key criteria that are setting up. We're talking about extremely high probability trades. So patience is the key ingredient to the success of this strategy, and really all strategies, and I can't emphasize that enough. So what is a high probability strategy? Well, the high probability strategy requires patience coupled with a disciplined approach, waiting for the appropriate scenario to unfold with a high probability of success. It recognizes that opportunities are made up easier than losses. So if you let a few pass by, we don't dwell on what could have been. There's always going to be opportunities around the corner. And then lastly, I realize that the less I trade, the better my strategy will perform over the long term. And again, the long term is what matters. And the takeaway is patient pays. So what indicators do I use, Silas? What is the secret sauce? What are the ingredients? Well, I learned early on to keep things simple. Pick a few indicators and try to follow them forever. I can't tell you how many traders I know want to follow Donchian channels, market profile, GAN, Bollinger Bands, Fib retracements. The list goes on and on. The high probability strategy that I'm about to show you uses price action alone plus one very common and free indicator, along with a couple of pro tips to take advantage of sentiment and technical extremes. So have you seen Jerry Maguire? Has anybody seen Jerry Maguire? Love it or hate it, this is a famous line: show me the money. And no, I'm not going to scream that at you like he does, but I can't show you the money because I don't know how you're going to trade, but I will show you the opportunity. So let's get to it. It's divergence. Boom, 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 divergence. Wow, what a secret, huh? No, who here has heard of divergence? So let's talk about it. Before you start fleeing, some of you will say, oh, I know what this is. I encourage you to stick around. So divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence basically warns that the current price trend, excuse me, may be weakening, and in some cases may lead to price changing direction. So basically, it means an indicator price action being in disagreement. And we can use any relevant indicator, such as MACD, RSI, etc. It's an indication of a reversal or a continuation, but more often a reversal. So what is divergence? It can occur between the price of an asset and almost any technical or fundamental indicator. It's typically used by technical traders when the price is moving in the opposite direction of a technical indicator. Positive divergence signals that price could start moving higher soon. It occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence points to lower prices. It occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? Because it's the earliest indication of a reversal to possibly enter. It's a good sign to exit, a good sign to scale into a position, and it means you're usually buying near the bottom or selling near the top. Hint, hint, that means the risk on your trade are very small relative to your potential reward. So divergences, the types. We have classic, and under classic, we have bullish and bearish. These are also sometimes called regular divergence. So bullish divergence is when price action makes a flat bottom or lower low and a higher low on the oscillator. A bearish divergence is when price action makes a flat top or higher high and lower high on the oscillator. So traders typically use divergence to assess the underlying momentum on the price of an asset and for assessing the likelihood of a price reversal. So if the market is making new highs, but the RSI starts making lower highs, this is warning us that an uptrend may be weakening. It's what we call negative divergence. Positive divergence is the opposite situation. So you imagine the price of stock making new lows while the RSI is making higher lows with each swing in the price. Traders would conclude that the lower lows in the stock are losing their downward momentum and a trend reversal may soon follow. Let's talk about hidden divergences. Also include bullish or bearish. These are sometimes when we have hidden bullish divergence is when price action is making higher lows but lower lows on the oscillator. This is what you'd normally see in an uptrend. Hidden bullish divergence is telling us that the oscillator is recharging to go back up again, or the continuation of an uptrend may resume. Hidden bearish divergence is when price action makes higher lows and higher highs on the oscillator, and that's normally what we'd see at a downtrend. Hidden bearish divergence is telling us that the oscillator is creating space to go back down again, or the continuation of a downtrend. So let's look at some examples here. This is an example of regular bullish divergence. It's the most frequent and is usually considered a sign of a reversal. If the price is making lower lows, lower lows, but the oscillator is making higher lows, as we see down here, that's bullish divergence. We don't need a series of lower lows. We only need one low to be lower than the previous low, and this can usually be found near bottoms. Here's an example of hidden bullish divergence. This is a trend following type of divergence. If the price is making higher lows, low, higher low, and the oscillator is making lower lows, low, lower low, this can be seen when the price is in an uptrend and indicates that the price may tend to go higher. Regular bearish divergence, also the most frequent, is considered a sign of a trend reversal when the price is making higher highs, high, higher high, but the oscillator is making lower highs, high, lower highs, and this can be found near tops. And then hidden bearish divergence is a trend following type. If the price is making lower highs, high, lower high, your oscillator is making higher highs, high, higher high, this can be seen when the price is in a downtrend and indicates that the price may continue its downtrend. Let's talk about identifying trend strength quickly. I see some of you are typing in questions. I'm going to answer those momentarily. Let's consider the following scheme here. Right here at point 1, buyers are jumping in because they believe a trend is starting or has recovered, or the new trend has begun, and they want to make money. So they are opening long positions, they're buying, and they're driving the price higher. The trend is accelerating as more and more buyers are jumping into the market. When we get here at point 2, some buyers are taking profits, the trend starts to weaken. Buyers are still dominating, but they calm down a bit because they're afraid that the trend is about to come to an end. And then 3 is when we have no more buyers in the market and the trend is likely to reverse. And that's when sellers step in and begin to dominate. Now, we can use tools to help recognize trend and trend strength, and one of those can be found with the popular RSI indicator. I believe that the standard rule of thumb, if you will, is when the RSI rises above 70, the market's considered to be overbought. When the RSI falls below 30, it's considered to be oversold. That's a great concept, but we want to use the RSI indicator in a slightly different way. Let's look at the same chart. Here we see 2 significant highs labeled A and B in the price chart. And we also see that in the corresponding highs in the RSI window pane below, A and B. Price chart, we see that price chart, we see that point B is higher than point A, means the price has gone higher. Now, RSI pane below is just the opposite. B is lower than A. It means that the trend has likely weakened and is probably going to reverse. And lo and behold, what happened? Market actually reversed and sold off hard. Now, we use the RSI indicator in the previous example, but it can be replaced with any momentum indicator, such as CCI, stochastic, MACD, and so on. All these indicators are derived from price, so there's really no better or worse indicator. It's really about preference. It doesn't matter what indicator you choose as your best friend. Every approach is equally good. We want to go back and focus on what matters, and that's just the concept and principle of divergence. Before we go into further examples, let's recap for context before we take a deeper dive. Bullish divergence, price is making two significant lows, but the second is lower. RSI makes two significant lows, but the second is higher. Bearish divergence, price makes two significant highs, but the second is higher. RSI makes two significant highs, but the second is lower. All right, regular divergence. We previously defined that divergence is a discrepancy between price and indicator movement. Note now that we've added the MACD to the chart. So when price makes a new low, new low, but the MACD makes a higher low, it's a bullish divergence, signaling that the trend is likely to reverse. This is a form of classic or regular divergence. The black line on the price is sloping down. The black line on the MACD is sloping up. Now, the depth of the divergence is a bit more of a subjective term. When you look at this example, you're going to see two divergence patterns, a bullish and a bearish. The first divergence is nice, but the second one does not look as promising because the two peaks or troughs on the MACD are not very significant. We consider a divergence to be deep if the MACD crosses the zero line. When we have this divergence, it provides a much stronger signal for a trend reversal. So let's take a look. On this chart, we see two div patterns. The first example is an almost double bottom, if you will. The second example has a more defined peaking action. When we peak, notice that the MACD line then crosses below the zero line, rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the zero line, this means that it is a higher quality divergence pattern. Now, we know that the basics of divergence, now that we know the basics, let's look at ways we can approach them in a smart and methodical manner. As we have discovered, divergence patterns can lead to consolidation, correction, or full trend reversals, and that's great, but we need additional information, a definitive plan about where to enter, where to place stop losses, and where to exit. Because with this strategy, we can make quick profits on small corrections or minor trend reversals, or try and capture major market moves. Because when the trend reverses, it's really every trader's goal to try and stay with the trend for as long as possible. So now that we know divergence is a very reliable pattern, let's talk about the ways this is viewed. Sometimes chart pattern traders see a double top. Elliott wave traders may see a shortened fifth wave, but they all refer to the same thing, the divergence pattern. This is what chart pattern traders see. This is what Elliott wave traders see, and this is what we see. Most traders don't realize that MACD or RSI divergence is exactly what they're looking for. Our approach removes the subjectivity because the div pattern is well defined. So now let's talk about entry. Let's look at this in even greater detail with some charts. The first is entry. Where or how do we even enter these trades? Now, there's a few different ways that we can consider entry. The first one is just a simple enter on next candle open. So we wait for the divergence candle to close, and then we enter on the next bar or candle open. Another method is to wait for a candlestick confirmation. That is, wait for the bearish candlestick, either an engulfing or some type of reversal pattern for short positions right here, or you would wait for a bullish candle or bullish reversal for a long position. So now we need to discuss the least fun or exciting aspect of trading, but by far the most important, that is stop losses or risk management. So one could argue all day the best place to put a stop loss, but let's keep things simple and objective. For a stop loss with this strategy, we can place a stop just below the bullish divergence pattern or just above the bearish divergence patterns you can see in these two examples. Here, we can see that the second turning point or the point of divergence acts as a minor resistance point, and from which price uses to retrace, and we are thus protected from being stopped out too soon. So we've covered entry and we've covered stop losses. Let's get to the fun part of trading, and that is profit targets, or where we're looking to take our money from the market. Our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon, so we don't want to place the first profit target too far. It's wise to place a profit target at a significant area of support or resistance, or what I like to call price structure. This keeps us from guessing some arbitrary amount of ticks or points. Notice here that the Divergence Valley is a good place for profit taking. You'll see that we have very clear price structure at these levels, and it is a price level that is likely to gravitate towards to that area like a magnet. And here, it's just no coincidence that prices have a reaction at these levels. So by taking profits at these levels, we can profit from div patterns that result in minor trend changes or corrections. And you can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to complete trend reversals. And we want to be able to take advantage of these trend moves that can occur, which is what we'll cover in just a bit. Let's talk about candles. So when we have a candlestick reversal pattern, or one that is an opposite divergence pattern that appears, that can serve as a good place to exit. These reversal patterns can signal that the trend is likely to reverse, or at a bare minimum pause. So if the candle pattern appears close to the first take profit level, but our order was not filled, it means that the price has reversed from our support or resistance point early, and we want to just simply close, say, first half of our position and not wait until the price reaches the take profit level. Let's take a look at the next example. Here is our buy signal. We're looking for profit targets at this area of price structure. We can see that price lurched up to the valley area, but put in a bearish reversal candle right near the TP level. Then price retraced a bit, came back up to that level a second time, put in another bearish reversal candle, this time drifting all the way back to the stop out area. So that's why when we see this, this is not by coincidence, that the sellers are starting to step in and they're rejecting this area. So we want to take some profits off the table there. Now, another great way to trade the strategy is just to add a couple of moving averages. Here, I've added the 34 EMA, the slow EMA, or the red one, and the 8 EMA, which is our green. Now, the first look at this example shows that the candlestick pattern was possibly a solid place to exit right here, but there's room for improvement. When we add that 834, we may be stopped out from our shorts by this candle correction, but the price comes in and bounces off of the 34 or the slow EMA and puts in a reversal, and we have a chance to re-enter the market and continue to ride the trade lower into profit. We can stair step our way down above the swing highs until we get stopped out, and we do so when we have that EMA crossover. So now you've seen numerous examples of how to catch quick moves as well as trend moves. And the most popular approach amongst traders that I've seen is they exit at a certain number of ticks or points or pips. But the most of them do it or are doing it the wrong way. Because as you know, every market and every time frame has different volatility. So it makes no sense to go for some arbitrary 100 pips or 5 points on the S&P or $7 on a stock and so on, because volatility changes over time, and it changes over time for each instrument. So the best way to determine our exit is by testing the strategy and learning that individual market's movement or rhythm. But there's an easier, less subjective way. So let's recap some exit strategies that work for your particular setups. Structure, plain old vanilla structure. That's valleys and dips at significant areas of support and resistance. Second is candlesticks. If we see candle reversal patterns that are taking place at or near our profit levels, but we're not filled, we want to exit. And then lastly is just using a EMA layover that can catch larger trends. Now let's talk about false divergences. How do we filter false divergences? Because we know, if you're familiar with divergences, they are certainly apparent in the market. We know that when traders are trying to jump in a new trend, they typically want some confirmation. And we know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when we have minor support or minor resistance broken. And there's nothing wrong with that. But with such approach, the entry can be too far away from the start of the move, and the risk can be too high when compared to the profit. Our goal is to limit risk. So we don't say that this entry technique is wrong, but there's a way to achieve more consistent profits. Where most traders are looking to enter, we are looking to take a quick profit. Those traders are looking to sell here. We are in the market here looking to take profit here. Those traders are looking to buy here. We are entering here and looking to take profits here. So I hope that concept makes sense. And I also want to remind you that sometimes the MACD histogram can look choppy, quickly reversing up and down, implying that the market is in a chop zone. See right here, this can generate a series of false divergence signals. And I see people, looking for chop indicators and things like that across the internet. This is all you need. This is a chop indicator. It's going up and down, right here, right here. That's all you need to indicate that the market is clearly choppy. But to prevent over trading, we found a way to recognize clear patterns. Our golden rule says that the signal line must be crossed by two peaks. So look at chart 1 on the left. You see how the signal line crossed the zero line? Here's our peak. We cross the zero line and back up, giving us our second peak. Look at chart 2 on the right. There's no crossing of the zero line. Peak, peak, and peak. We never crossed the signal line. So back to entries. Our goal is to enter as soon as possible after the pattern has formed. We know that our strategy gives a signal just after the MACD hook, or what I call the turning point. Only after that MACD hook has formed, you'll recognize the second peak on the MACD histogram. This is where we like to recommend entering, which is basically the next candlestick open. It's a very simple, very mechanical rule. But I further fine-tune this into an even more reliable method, and that's by using simple trend lines. Experience has told me or shown me that trend lines are a great confirmation tool, and really for all trading strategies. So when we're looking for a long, we just draw a trend line on the chart by connecting minor highs and place a buy stop order above the trend line. When looking for a short signal, we draw a trend line on the chart by connecting the minor lows and place a sell stop order just below the trend line. So when the price breaks the trend line, we're in. The entry is almost the same as the quick entry on the next candle open, but sometimes it protects us from the false MACD hook when the MACD turns again and continues to fall. It's a bit more discretionary, but it's a very effective way to enter. And here's just another example, but this time to the sell side. Place a small trend line on the chart. We enter on a sell stop or confirmation retest of the trend line break. So let's recap everything you've learned. You've learned a high probability reversal strategy, learn where to enter, where to place risk, where to take profits, and how to filter false setups. How do professionals trade it? Have you ever wondered why the market turns against you when you jump on a promising trend? That most tempting signal is probably a trap. As there are no more buyers to move the market, the sellers dominate. As there are no more sellers to move the market, the buyers dominate. Divergence masters know how to enter in the opposite direction just before major trends turn. And this is a quote I love. It's by Max Gunther of the Zurich Axioms. So yes, following the herd may work sometime. Think of the 90s tech bubble, worked until it didn't. The 2000s real estate boom worked until it didn't. Cryptomania of the 2010s. But do you really want to be the one chasing new highs when you have the high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Of course we do. Of course we do as traders. So when you trade this way, your winning batting average could be sub 50%. Yes, you do not have to be right 50% of the time. You don't even have to be right 40% of the time when your risk to reward is overwhelmingly skewed in your favor. But here are some additional pearls of wisdom. The less you trade, the more money you'll likely make. We want to filter the unreliable divergence patterns and focus only on the strongest signals. And moreover, when we can use a customizable indicator that can deal with this for us, where all of the process of recognizing the pattern in the chart is done for us automatically. And we sit back and we enjoy the various exit levels and find out what suits our trading style best. But how do we do this? How do we do this? You can scout for quick profits on tick charts or minute charts. You can look for intermediate trend changes on an hourly, daily, or focus on the larger time frames, the daily, weekly, monthly. Depends on your trading style. And you can do it across any asset class. But patience is key in this game. But how? Silas, too many markets, too many time frames. I don't have enough time. Well, we've now developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, and scrutinizing hundreds of charts, trying to determine if what they are eyeballing is actually divergence or not. We've cracked the code and simplified the process. But how? Who's ready? Who here in this crowd is ready to stand out from the crowd and is ready to trade like a professional? I'm gonna take a swig of water here. All right, awesome. And I'm gonna answer all of your questions and address your comments, promise. So great, those that are excited, I'm pleased to introduce Divergence Dominator Pro. DD Pro is a fully complete, comprehensive trading business in a box solution. Let me quickly guide you through what the DD Pro package is so you can immediately see how it will benefit you and your trading. What's all included? Turning point identifier indicator, the DD Pro scanner, price action pro trading course, candlestick pattern recognizer guide, divergence cheat sheet, DD Pro trade journal, TPI fast slow line cheat sheet. And what does all that mean? What is it? Great question. I'm glad you asked. Well, the turning point identifier indicator, what I would call the TPI, auto plots divergence setups on your behalf. scanning the markets to locate key turning points, locating and trading multiple markets across multiple time frames. What does it look like? This is the TPI indicator in action. You can now, in seconds, pull up your favorite chart, attach the TPI indicator, and bam. This is a daily chart of IBM. Notice that we have our TPI buy signal right here. TPI sell signal right here. Here's what it looks like in another example. Daily chart of the US yen. So we can now, in a glance, see major reversal turning points on any market or any time frame. You can see our green line, that's our bullish divergence line with a bullish TPI buy. Here's a bearish TPI, a bearish TPI sell, bullish TPI buy, bearish TPI sell. Here's another example. This is a 5-minute chart on the pound US. 5-minute chart, bullish TPI buy, bearish TPI sell. So can everybody see the TPI in action? Everybody see that? What platforms do we have it on? How about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4? Attach it to the chart that we just discussed and immediately begin to see turning points, or i.e. the divergence in real time. Here's what it looks like in Thinkorswim. You see our bearish TPI signals down here, bullish TPI signals here, bullish TPI signals here. Note it, what does the market do? Goes up. What does the market do? Goes up. What does it do? Sells off. Here's what it looks like on TradeStation. Here's your bullish TPI, bearish TPI. Here's what it looks like on NinjaTrader 8, bullish TPI, bearish TPI, bullish TPI is right here, and a bearish TPI, and the market trades lower. Here's what it looks like on TradingView. Bearish TPI, market trades lower. Bullish TPI, market trades higher. Bearish TPI, market trades lower. And then finally here on MetaTrader 4, bearish TPI, bullish TPI, bullish TPI. Next is the scanner. We don't want to locate all these setups manually, do we? We've now created a scanner for TradeStation and NinjaTrader 8. We are in the process of creating one for Thinkorswim as we speak. So if you've been trading for some time, you've already know that divergences are probably one of the most reliable and profitable setups. But here's the thing, manually identifying these are difficult, it's time consuming, especially if you're analyzing multiple markets in any time frames. And that's where TPI comes into play. Automatically detects the highest probability divergences for you, all with the click of a button. Here's the DD Pro scanner in TradeStation, NinjaTrader 8, and as I said, we're working on Thinkorswim as we talk. So when you combine the indicator scanner, we know it's capable of identifying divergences across all asset classes, time frames, chart types, whether you're a scalper, day trader, swing trader. But aside from the indicator scanner, I really feel like the crown jewel of this Divergence Dominator Pro package is the Price Action Pro trading course. And this is a 10-part on-demand video module detailing all of the following. It's a 10-part on-demand video with all of the following. This is my only full-step A to Z training course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, completely removing the uncertainty, all by trading in conjunction with the TPI. So, do you want to quit guessing? Are you ready to feel confident about your entries? Are you ready to remove emotions? Think like a professional, scale your reward versus risk, have a solid trading plan? Then if so, then this package may be for you, because this is really no big secret. Divergence has been known and used for decades, but now not only do you get a first of its kind tool and indicator that's locating high probability turning points on your behalf, you're going to get the Price Action Pro trading course. Has all of the solutions to help you with each and every one of these bullet points. Pat helps solve these troubles in a very comprehensive step-by-step on-demand video module course that can be viewed at any time at your convenience. Next, you're going to get a candlestick pattern recognizer guide. It's not your grandma's guide to candlesticks. We know that there are dozens of candlestick formations or patterns out there. This guide is short and sweet, and it covers the most important patterns that you should focus on. It can be downloaded and printed off at your desk reference and study everything from the ins and outs to the structure, how to interpret, and more. Next, you're going to get a divergence cheat sheet. Another incredible bonus of this package. You can also print and download this. It's great for those that like written descriptions and summaries, but it can also help accompany all the video modules. All right, so with the Divergence Dominator Pro, you're going to get everything that we just talked about. But what is all of this worth? What is all of this worth to you? If you're now able to profit in any market condition, you can anticipate major market reversals and turning points. Or what if you could trade on your time? You're day trader, scalper, swing trader, position trader, and now you had all of the tools, scanner, indicator, videos, training guides. DD Pro does all of the hard work for you. You no longer have to guess where to enter or where to exit the markets. But I want to determine if this is a good fit for you. If you like scalping on nanosecond charts from dusk till dawn, if you love to be stressed out and have heart palpitations, if you get a thrill of blowing out accounts over and over again, if you have a gambling mindset and never have a clue where the market is likely headed, I'm sorry, this is probably not for you. But this could be for you if you're ready to think like a professional trader, if you're ready to remove your gambling mindset, if you're ready to get serious and treat trading like a business, and you're ready to kick your emotions, focus, and have confidence on each and every time you place a trade, this could be for you. So let's talk about the Divergence Dominator Pro package. I have a very special offer for today's workshop attendees. The Divergence Dominator Pro package, the TPI indicators alone cost over $2,000 to build out. The scanners cost over $1,500. The PAP course and all of its contents have a $500 plus value. The cheat sheets, guides, and bonus materials are all another $400 plus. That brings the total value of this package to over $4,400. But I'm very proud of this indicator, the course, all the educational materials. I want to get this out to only those that are serious, those that are tired of kicking tires, those that are sick of jumping into sleep from system to system, those that most importantly are ready to take action and ready to see some real results. We're not going to charge $4,427. We're going to charge $2,999 or $1,999. And we're not even going to charge $997. As part of this live webinar special, we're pleased to offer this to the first 25 signups, a single one-time fee of $397. Yes, it's a one-time fee of $397. The offer link is seasonalswingtrader.com/pro. It's almost 90% off the $4,400 value. You're going to get the indicator suite, the scanner set, PAP course, guides, cheat sheets, all for a very low fee of $397. You own it for life for all of these platforms. You don't have to request a license key for any platforms. You get access to all platforms, the indicator and the scanner that they're available for. But I often get asked, Silas, how do you trade these setups? Well, the easy answer is that it all depends on the setup. My overall outlook, whether it's shorter to intermediate based to more position based, what other positions I have on, and what the risk reward is of that particular setup. So, but if you ask, I like to trade credit spreads primarily on equities. I will also trade debits and credits on equities as well as commodities, and I trade both the underlying futures and forex. But let me say that what or how I trade really doesn't matter. Frankly, you should never be concerned with what I'm doing or what anybody else is doing. You have a question or idea, shoot it to me. But at the end of the day, you are in control of your own account, how much capital you have, your knowledge, your risk tolerance, and how much time you can personally commit. So the offer link is seasonalswingtrader.com/pro. We put that into the chat. I'm going to come back and answer all of your questions. We put that into the chat. There you go. So here's the offer once again. You're going to get the DD Pro TPI Indicator, Thinkorswim, TradeStation, NinjaTrader 8, TradeView, and MT4. The DD Pro Scanner for TradeStation and NinjaTrader 8. And we are working on TOS, and when it's available for TOS, that will be released. No additional charge. We'll send you a nice little email saying, hey, congratulations, we have TOS now available. You're also going to get the PAP Pro course on demand, the Candlestick guide, DD Pro Trade Journal, slow fast line cheat sheet, divergence pattern master cheat sheet, and more. So let me take a look at all of the questions. Give me one moment here, and we're going to look at some live charts. See, Geraldo, the link there is in the chat, seasonalswingtrader.com/pro. Hopefully you've got a hold of that. Does this work on very small time frame? Yeah, Gar, I'll show you 1 minute. We'll show you several examples of today's action. Sherry says Divergence doesn't work. I'm sorry, Sherry. Sherry also says you're going to show old charts. Yeah, we did show old charts in the presentation, but we're going to look at some live charts, some current charts. Same for you, Mary. We'll show you some live examples. Just be patient, please. Yeah, you can email me at support@seasonalswingtrader.com. It's not on wealth charts. Appreciate it, Jeff. Looks like we have 6 gone. I don't know. I'm not looking at my support guy just texted me. We do limit this to 25. Why? It's not some type of gimmick. It's because we actually support our community and our traders and our members, and we want to make sure you get up and running, no problems. Let me show you the members area so you can see exactly what you're getting into. No, this is not a recording. This is live. All right, so Divergence Dominator Pro member area. You're going to get the TPI indicator. Here's all the indicators. Here's the scanner, and I'm really looking forward to adding Thinkorswim here very soon. Installation guides and all that good stuff. Here's all your Price Action Pro course modules putting together. Here's your guide, cheat sheets, trade plan, and so forth. TPI slow fast line. I'll show you what that means when we look at a chart. And the trade journal is just what it is. It's a trade journal for you to track your trades. It's very important for you to track your trades, regardless of what you're doing. If you choose to sign up or not, it's very important that you track your trades, your progress, so you can go back and see how, where you went wrong or what you're doing right for comparison. If I only want to use this for daily and weekly setups, use NinjaTrader 8 in a day, we'll be able to load the software on that. Yes, and I'll pull up a chart there, Sarah, Sarah, sorry. And we'll look at it side by side. That's what I like to do either on the weekends or in a day, is look at weekly and daily side by side, or even do a bigger top-down analysis, monthly, weekly, daily. I'll show you in a second. Matt, not sure about WC at this time. If we get enough requests, possibly. Oops, let me get that back. If we get enough requests, possibly, we'll look at adding that. Same for you, Ned. Not on Sierra charts. We just don't get enough demand for that. And so I'm sorry to say we don't have it on Sierra at this time. No, these do not repaint. Does not repaint. Let me, sorry there. I'm going to my scroll up here. One moment. Yes, this is a one-time purchase, George. One time is not a renewal. How often do the signals appear? It just depends on the market and the market movement. They'll appear more on a 1-minute chart versus a daily chart. It's offer link is seasonalswingtrader.com/pro. Link should be working fine. Laura, please send me an email at support@seasonalswingtrader.com, and I'll reply to you if you want that. I just don't have that link handy. Yeah, I use TOS primarily. TOS and TradingView are really my two main platforms. I use MT4 as well. Got accounts with everybody here. Doing some work on some back testing type stuff on NT8, but really use Thinkorswim, TradingView, and MT4. This is a new indicator, yes. Thanks, guys. Do not see how to buy it from the screen. Go seasonalswingtrader.com/pro. Let me see if I can put that into the chat for you, just so you have an actual clickable link. You can't click on that slide. Let me pop that to you. All right. Yeah, you should get a confirmation email. Within a minute or two. Just might want to give it just a couple minutes maybe. Check your spam or junk folder. Nope, you do not need to tell me what platform you wish to use. As you saw here in the members area, you get access to all that right now. Yeah, we'll show you what the TPI fast slow line means. I will do that. I mean, Canada, does it work on Canadian stocks? Yeah, works on anything that you can chart. Anything that you can chart. As long as your trading platform is one of these, and you can chart a market, it will work. How often they occur? Again, I've answered that. It's impossible to answer that. It all depends on the markets and the time frames. You can adjust the fast slow lines. Yeah, I think the PAP course is a real eye-opener to not only trade with TPI, but to look at markets differently than what you may be doing now, because it's really boils down to just price structure, basic supply and demand analysis. And when you combine the TPI indicator, it makes it that much more powerful. Mary, I'm sorry to hear that it's not working for you. You can try the link again, or email at me, support@seasonalswingtrader.com. Yeah, we got several folks doing that. Yeah, just let me know, Laurel, no problem. All right, guys, let's look at some charts. And I think I've got more questions coming in. So Whoever accused me of Monday morning quarterbacking, whatever. Let's look at some live charts. So I was looking at gold earlier. So today's action, you can see the indicator down here. And let me do something. This is, let me add we just had a newer version updated. So let me do one thing, if you don't mind. I'm going to delete that, and I want to do that. And then I want to, just so you can see the arrows a little bit better, make it black. All right, now we go. And then you can change these colors. Let's actually make. I like to see these a little bit darker. And you can change the thickness. So, all right, let's hide that. So now you can see things a little bit better. So this is a TPI fast slow line, and you can adjust these settings. And here's your divergence indicator. So here's the TPI buy on this 5-minute chart of gold. Here's the TPI sell. Let's look at some of the other markets today. I like the 10-minute chart a lot. 10 minutes been working well. So we look at the ES. So we've got a current sell activated here on the ES. We didn't really have anything today other than this trade in the European session. Trade below 3,800 took you to the next area of structure at 37.90, and then ultimately traded even lower. If that's not enough signals for you, if you're in trading New York session, you can look at, you can drill down to the lower time frames. Here we had, so that's the last, 5 minutes of the session. I'm not really trading there. Here's a sell signal we had at 10:15 a.m. Here is a sell signal at around 4 a.m. So right there in the European session. Whoever asked me about the 1 minute, let's look at the 1 minute. So here, nice scalping going on here in the Asian session. There's a sell, there's a buy. Let's just take this puppy back. There is a sell, didn't stop you out, took a little bit of heat, and then it just swooshed down. Here's a nice sell, scalp sell. Let's see what we got here at lunch session, 12:15, 86 down to 83. Here's another one, we'll call it 84 down to 82.5. Have potential buys here. This is where we use the trend line analysis. Here's a nice sell there at 10:15. Here's a nice buy at 10:04. Man, there's a sell right there at the cash open, 8:30 Central, 93 down to 83. Huge profit potential there today, folks, on those markets. Let's look at, you will look at crude oil today on a 10-minute. So we've got potential sells coming in. This is what I do, is I draw trend lines, and I like to see trend line confirmation. So right here, we had that arrow. We also had trend line. We did get a break here at 52.60. Took us down, I don't know, 52.50. 52.52, so about 8 cents, I guess. $80. Let's look at a 5-minute, see if we had any more setups today. So here's what we're talking about. Here's a buy right there around 53 up to 53.15 is first target at that structure. Here it looks like to be a buy, potential buy at 53, went up to 53.10. So, I mean, you're talking 10, 15, 20 cent scalps there on those markets. SRPT on a daily, SRPT daily. So here we have a lot of sell signals coming in. The market, this is perfect for the credit spread traders out there. Here we had a sell, traded down. Here's a sell at earnings, traded down. I don't trade around earnings. Here we flip to the buy side. Using basic trend line analysis, there's a buy, boom to the upside. Weekly, so obviously you're not going to get as many sells or signals, excuse me, on the weekly. But here's one we had in July, moved from 159 down to 130. Here is, did this occur? Wow, we got that print we got that print 2 weeks ago. And then we went from 170 down to 85. Look at right here. Where would be our target? Target is going to be right there because this is area price structure. What did I say? What did it do? Went down there and stopped. And I did not look at that before we came in here. Tesla. So on a stock that's just ramping higher, the trend line analysis is ever important. So we had a sell right here. We traded down, so we had, we see trend line breaks. You don't have to use a trend line break. No, we had trend line breaks here, down, looking, attempted to sell right in here, went sideways for several weeks. Grub. So we had a sell back here in late Aug, another sell here in late October. So this is why I'm excited about the scanners, is being able to locate these, and you can have them sitting there, say, show me the buys or the sells for the last 5 bars, 10 bars, whatever. Netflix. All right, so we don't have anything other than this sell back in September, and I'll take that. 500 down to 460, but nothing else. So down here, these fast slow lines, you can see other opportunities. They're a little bit more aggressive. It's not by definition a TPI signal, otherwise we'd see an arrow there. But you can see when we do have these crosses, there's usually likely a trend change. Sometimes it catches them early, sometimes it's a little delayed. I prefer, and I would recommend, if you're just kind of new or starting off, just go off the arrows. So they're going to be a lot more, probably give you a lot more accurate signals. Geraldo, did you get the confirmation yet? Ken, I'm not aware that there's a scanning component in TradingView. If there is, if you are aware of that, of somebody that can build a scanner in TradingView, and you can make an introduction to me, please do so. Email me, support@cecilswingtrader.com. I work with some really good programmers, and I've been on a quest for quite a while, several years actually, to look for scanners on other things I built for TradingView, because I love TradingView. I'd rather just pretty much operate out of TV and do my execution on Thinkorswim. But if it's possible, or somebody else can say, hey, you're wrong, you can do scanners on TradingView, hey, doesn't hurt my feelings. Let me know. Terry, possibly. We don't really, we're not set up for payment plans or worth doing anything through PayPal, but if you email me, I will, we'll see what our team can do. May not be able to put it together tonight, but if you email me, we'll have you there, in our system, and we'll follow up with you for sure. Yeah, it looks like there are 14. So 14 units have gone. So that's 11 available. I appreciate that, Laurel. I'll be looking for your info, your email as well. James, stops, entries, and profit target. So, we've covered that in the presentation, but I realize everybody's different. So you know, if we look at like what would my entry be? Well, the entry, there's different entry methods. There's different entry methods. We talked about the candle, you know, sell on next candle open or buy on next candle open. We also talked about using a trend line. What I like to do, and I talk about this in the PAP course, this Price Action Pro course right here, about different entries and exit methods. But what I'll typically do if I see a sell, I'm either going to use a trend line analysis if we have a clear trend line to draw. If we don't, I will sometimes I'll set price alerts and look for set them on, you know, a tick or two below that candle low or above that candle high, and then I get alerted that, hey, we broke the low or broke the high. I'll consider entry methods that way. But I really like the trend line technique. And as far as either, you know, even putting the odds more in our favor is making sure we're trading at price structure. Like if you do a top-down analysis, and I don't know if this is a top-down analysis, but I know that we've got overhead, you know, resistance up here at these levels. And that might be from a monthly perspective, might be a weekly perspective. But when we come back and bang into these levels that we rejected before in the past, where we sold off heavily, and we get a signal, I'm pretty much okay taking that risk. And our risk is very simple. Our risk is just above the swing highs. It's going to be different for everybody because our risk tolerances are different. But our risk is going to be above the swing high somewhere that you're comfortable with. And it's also going to determine how are you trading this. Are you trading bear call spreads? Are you buying put debit spreads? Are you trading the stock? Are you selling the stock outright? That's where our risk tolerances may also be different. So whereas, you know, if you put a stop, let's say, well, I'm going to risk up here at 560. You know, that's just an arbitrary number, or above these swing highs at 575. I might be able to sell a call spread way up here, maybe at 585, 590. I might be willing to risk it up to my short strike or 2 times premium. You know, if you're selling the stock here though, probably don't want to let it run all the way up that high. You may be willing to just stop yourself out sooner. Another thing I'll tell you is go down. Then once you do your top down analysis, go down to the lower time frame. And you may not want to do this on stocks, but you can. But I do it on the futures and FX markets. Is if I get something on the daily, then I'll drill down to the 4 hour. Or if I'm on the 4 hour, drill down to the hourly and so on. As far as profit taking, again, to keep it simple and objective, is just target areas of price structure. So this was the last area. Now we didn't know, we can't see the future, right? We can't see all this on the right hand side. So we got short here. What all do I see? I only see, so we don't see anything to the right, but I know that this is where price took off and caused these new highs. I'm targeting this area. So if I'm getting short up here somewhere at 530, 500, wherever that is, I'm targeting 480 area, 475. Same thing. If we had another one here, I'm targeting that area again. Look at that area has held and held again. Hope that helps answer a little bit. We showed up at indices prior to market crash. Oh, good question. Yeah, so the indices, so when we're in the straight up market, I mean, just these nosebleed uptrends, you're going to get, you know, you're going to get some, I guess, what I would say, not quality signals. But how can you keep yourself out rather than just trying to blindly fade the market? Yeah, you may want to sell it because you think, you know, oh, the market's got to sell off. But if you use basic trend lines, it's going to help you. It's going to help keep you out of, like, you wouldn't want to sell, wouldn't want to keep selling into this trend line. Wouldn't want to keep selling. This is, you know, we have this long-term channel. Now, if you want to look at, what I would say is go down to the lower. Look at these signals on the 4-hour chart. Is this not amazing? So, I mean, there's some nice chunky moves here on the S&P, 3640 down to 36, almost 40 S&P points. Here's, you can see these sell signals. Still like to work these little trend lines on the smaller time frames as well. But you get nice sells right here, nice sell here, nice sell here, nice sell here, and we put in a sell on 1.8, which is right here, right below these lows at 3,800, and we've been down to see 3770. So little 30 points of action right there. Yeah, James, good question. So I don't trade binaries. I'm obviously familiar with Nadex. I think I have an account there as well, but go back and like look at the 10-minute chart on some of the currencies, some of the products that can be traded on Nadex, or maybe you say you trade binaries, maybe you're overseas and trade binaries on other, you know, on equities overseas and stuff. You can go back and it puts out some really quality signals. I think there was a trade on the Canada or the yen today. That was yesterday. So if you trade like these binaries here, I mean, it rarely will come back, you know, to that swing high. You see about the yen. So here's a weird kind of double signal right there on the 10-minute. It doesn't happen very often, but it looks pretty choppy. So I don't know if you take the buy or sell, but we've got price structure down there. Are the stops and profit targets included? Great question, Walt. We are working on in the background. We're going to do it for TradingView first, and then once we work out all the kinks and things like that, we're going to move it to TOS and TradeStation and NinjaTrader and so forth. But what we're working on is our levels. So we're working on, let's say that we get a buy or sell. Let's look at something a little bit more clear here. Let me clear all this junk out. All right, so like we have a buy signal here, sell signal here on the yen. So when we get this arrow, because there are different ways that we can enter and exit, because we're all different, right? We're all likely going to be entering and exiting on different candles, and the different platforms use different data providers. So you might be a bar, 2 off, or whatever. But the basic concept is, instead of we never want to go into a trade guessing, or if we're not clear or uncertain, you should avoid the trade. But if you take this short here, we know that we need to be targeting this area. We want to make sure we at least have a minimum 1-to-1 risk reward ratio. But what we're trying to program is our stop. So our stop level will be a function based off ATR above the swing high. So instead of the stop just going, you know, a tick above the swing high, we want to give it a buffer of an ATR, and that will be we'll have that as an ability to be a multiplier, say times 2 times 3 ATR for that particular time frame. And then targets are a little bit trickier. Because yeah, you know, 2 times entry, 3 times entry, great, but we want to try to put something a little bit more focused. So maybe that's targeting those things that we're working on with the programmer. And that's kind of just a little teaser. You asked, and it's not ready yet. It's in the works. So when that is ready and available, we'll release that, and there's no extra charge or anything. Any updates that we make will be included. Roll Tide, Terry. Thank you. Does it work on options trades? Absolutely. Yeah, I think I covered that, but just to recap, you know, regardless if you're trading the yen or you're trading cotton or you're trading, you know, Walmart, it doesn't really matter. I like selling options. So here are perfect examples where you could sell out of the money calls or out of the money bear call spreads. Here's where you could sell put spreads or puts, or you could you could buy calls, or here you could buy puts. So yeah, absolutely. I use it to trade options a lot. Yes, we will support you. We'll support you at purchase. We'll support you after purchase. We'll support you a year from now and 5 years from now. We're not gonna, we don't limit you to 30 days access to support. We like to help our folks and keep it going. And I get a lot of great ideas from you guys, feedback from everybody. It's helped us enhance products in the past. This is new, so I don't have a lot of feedback enhancement requests, if you will. We're working on things. I mean, it's pretty much pretty you know, out of the box, good to go. But that option to show entries or excuse me, profit levels and stops are just going to be another value add if you want to see it. You don't have to see it. Those are our TPI fast slow lines. It's the proprietary indicator that helps create our buy and sell arrows. Kind of SP, kind of thinking along those lines. I like those levels that we did for the other indicator. So we're kind of thinking about doing it something similar. Of course, as always, you know, we'll try to make it where the colors can be, you know, if you want to change the colors and the thickness and all that, we'll do. But we're just trying to get something kind of out first. Let's say we have a sell, which we do on the yen. It's going to say boom. Hopefully, it's going to plot at the next swing low or swing high, have 2 profit levels, possibly 3. And then our stop, instead of being right above a swing high or swing low, we'll likely make that a function of the ATR. I don't know about the tick chart. Can you load a tick chart on TradingView? What about when there's no arrow, just a crossover? So you can take the crossovers. Like I said, I think it's a little bit more of aggressive trade, but you can see, excuse me, that the crossovers do provide very accurate signals as well. And I would treat it the same. You know, if you know, use trend lines, and you know, as you're crossing here, you're also getting that trend line break at the same time. So that's obviously what we want to see. It's not an official divergence signal based off the TPI methodology, but you know, here we had a cross a little bit earlier, and here we caught, you know, a buy. So that can also be served as a potential exit from an official TPI signal. So if we sold here and we're targeting here, we got that, and the trend is still pointing lower. If we're still into this trade and maybe you're not moving using other moving averages or whatever you're doing to trail your stops, you see once we kind of turn green, that means that the trend is possibly changing. And then when we get that cross, it has temporarily changed. So that can be another exit point, but keep in mind, it may not always be so spot on. Sometimes it may not cross until the market's all the way up here. So just go test. That's the best thing to figure out about these things, is go back and test and see which methods work best for you. Thoughts on a standalone web system for those not with the major broker. We've entertained it for other products. It's a little bit difficult to do. You know, I can't say, I'll never say never, but it's not in our immediate, you focus right now because there's pretty substantial programming involved to make it a standalone. But I do like the concept. I really do. That way, most you can get an account on most of these places for free. But if we do, we'll be sure to let you know. But right now, I'm not at this time. There is none, Walton. There is none, but if you have any problems or questions or need assistance, you email me his support at Seasonal Swing Trader, and we'll work with you there. Show a stock on a 60-minute. Let's look at what we were looking at earlier. Netflix. Let's see, hourly. So here is Netflix. Yeah, a little after hours. No, that wasn't after hours. That was at 1:30, I guess. There's a sell at what time is that? 2:30 on the 17th. Sell on the 8th. You see that they last for can last for a few days, so that's it. Can be used as a good swing trading tool. Let's go back a little bit further. Looks like I got filled on something. These, typically speaking, I just kind of avoid. It may or may not have worked however you traded it, but on these large bars, you can see that we're kind of at selling down into support. I'll avoid those. This just looks like to be around earnings and all that. Looks like we got some sells coming in here into an area. So that's what it looks like on the hourly. What's your question? That's right, Well, should not take a while. Your confirmation you should get within a couple minutes. I would check your spam or junk folder just in case. Check your spam or junk folder. DTPD, DPTD. My platform does not recognize that. Did you get that? Is that the correct symbol? SP, I don't trade off of I don't trade anything lower than the daily for stocks. So the weekly and daily. Problem right now, it's not a problem. It's just, I guess for me, is we're around earnings. And so I don't trade earnings. I'll put some things on before earnings and get out before the actual earnings announcement. Another thing, obviously, we've had a market melt up in a lot of individual equities as well as the indices. So we're not getting very many buy signals. We're getting sell signals, but the sell signals come with caution. We're trying to fade this market and a lot of the other markets, the currencies against the dollar, and the grains and some of the other softs, because the weakness in the dollar has been really tough. And I tried to, and I'll admit, I tried to short some markets, short some of the currencies against the dollar, and also short some commodity markets. And I lost. I did not really wait for confirmation. I got a little bit more aggressive on it, and they turn quickly. But we've had some good trades in the commodity markets, equity trade. I'm trying to stay balanced, both the short and long side, just because I feel like could be a coin flip with all this craziness going on. But I'll likely probably lighten up, as we head into the rest of the month, just because of the uncertainties and January has been kind of a notoriously choppy month, especially kind of in the January timeframe. You're welcome. If you guys aren't seeing any confirmation, because there's a couple people now that have said something, I guess first off, I would say email me at support@seasonalswingtrader. And if you haven't checked your spam or junk folder, please do so. All right. I will have my team. Hopefully, they're stuck around, and everybody that hasn't received. Okay, yeah, I got a lot of people telling me that they did get their confirmation. There might be a 5-minute delay timer on it. I don't know why that would be, but there might be a little delay. If you are not getting your confirmation though, please email me because I want to make sure you are taken care of. Support@seasonalswingtrader.com. Support. Let me put that into the chat. All right. Yeah, a lot of folks have. So I think you may. All right. Support@seasonalswingtrader.com. Make sure I got that right. There you go. There it is in the chat. A lot of, I would say more of you have than haven't. So please check your spam or junk. If you've done that and you still haven't, it's been more than 5 minutes or maybe 10 minutes. Email me. You can email me either way and let me know. And if my tech guy is getting late, my tech guy is may not be able to hook you up this evening, be first thing in the morning if so. That works for you. All right, guys, I think we're well past my time and probably past yours too. Go get some rest. Have a great day, a great evening, wherever you are in the world. This is fun. Like I appreciate your time. I appreciate your questions, your interest. And because, you know, bottom line is the proof is in the pudding, the proof is on the chart. And, you know, it all comes down to how you trade it and how you use it and how you manage your positions, your risk, and things like that. But if you have any questions, feedback, comments, good, bad, or ugly, please email them to me. I love to hear from you. Love to get your feedback, communicate with you, and or if you have suggestions on things that we can do to make it better. So I appreciate everybody's time. Stay safe out there in health as well as in the markets. And we'll see you on the flip side. Take care.